All right, good morning, everyone. Um, Time is about 8:36 Eastern time. I'm just here for my pre-market analysis. So, a couple things I meant to point out yesterday. As you can see, this is crude oil. I was looking for just the price action on crude oil. Sometimes I'll look at different commodities such as the dollar index or crude oil, sometimes gold, just to measure. Uh, Sometimes they'll have an effect on the different indices. I don't trade commodities anymore. I used to trade gold and what else? I used to trade gold and soybeans. I don't anymore just due to I like to stick to the Nasdaq and the S&P 500. There's various reasons, but I just like the cleaner price action that these two uh, U.S. indices offer. But uh, as you noticed, or may or may not have noticed in my last video, I have the mini Dow up here. Um, I use one type of indicator, I guess you could call it, and that would be the SMT divergence. Now, ICT, this is one of ICT's concepts. He's the creator of this, and I'll go into it more in depth. I'm still sort of scratching the surface on it, but what I look for is, um, let's say that the um, let's say the Nasdaq had swept a previous high or buy side liquidity resting buy stops on its chart over here, and that similar high on the S&P 500's chart was not swept, then that is a short signal in the Nasdaq. Um, Obviously, you don't want to base your entire trade off of that, but that shows that the NASDAQ is giving a fake breakout. It's giving a run on stops in order to target, to distribute those contracts at a lower price. So that's sort of the base reason why I have the three main US indices up here. Crude oil is not usually up here. Um, so I guess I'll kind of take you through what I do pre-market. I basically, um, usually I'll do this for both of the indices, um, but I switch over to a 15-minute chart and I map out buy side liquidity as well as sell side liquidity. So my favorite kinds of setups that I believe to be the strongest from looking at charts for over 3 years is the double bottoms and double tops, or triple bottoms and triple tops. Those are types of those bottoms or tops are levels of liquidity where resting buy stops or resting sell stops are placed in order for price to reach to it. And the algorithm will pick that up and deliver price to those levels. They're very strong. They're very, I guess, so we can kind of internalize this idea. They're very almost magnetic to price. So, uh, to show you what I'm talking about, we have a double bottom, sort of a triple bottom, but more of a double bottom right here. So I'm going to map that out as sell side liquidity because this is two swing low bottoms. And then all the way down here, keep in mind it's a 15-minute chart. So 34, 35, yeah, 34 points below on the S&P is my lower end of sell side liquidity. This is for intraday liquidity. This is not, I'm not a swing trader, I'm a day trader, so I don't necessarily map out very far reaching levels of liquidity, um, on a daily chart, unless we are reaching that level very near term. If I show you my daily chart, um, so this is a market maker sell model, but before price started reaching up here, um, and I guess I can, it's, I am going to show you guys my mistakes that I make. This one was not very costly. I've made costly mistakes before, but this is your original consolidation, sell side of the curve, reversal from a sweep low and a sweep of these lows here. So swept that low, and then we formed the buy side of the curve. And I thought price was going to top out around this original consolidation here. It did for a very brief period of time, and then some news drivers brought us up. And now on the daily chart for you swing traders, price looks to be wanting to reach buy side here, and then buy side here. So, oops, there we go. Just mark this out. So, um, those are really the two levels. Up here, up at 4680, just about, that's all-time highs. Yeah, that's all-time highs. I don't believe that we're going to take that out unless we get some sort of one of those like Santa Claus rallies in December. I haven't done much back testing in the charts from that. Um, I know CNBC loves to talk about it. Uh, if you want a little bit of advice, take do not take advice from CNBC. Uh, they're proven to be liars, and none of them are experts. But anyway, so unless we see some sort of December rally, I know um, one of my friends pointed out that um, I think it was 12 out of the 15 past Novembers have been rallies in the U.S. indices. That is something to keep in mind. And I told him I don't know if I told him this, but I believe that has to do with quarterly theory. Um, so that is something I'm starting to delve into a little bit deeper, uh, which I will most likely come out with a video explaining it, but that might not be until the future. But I guess I should kind of get back on track here. So back to the 15-minute. Now, my sentiment today is bearish. I want to see us dig into I want to see us dig into this inefficiency here, this sell side imbalance, buy side inefficiency. I'm sorry, buy side imbalance, sell side inefficiency. I want to see us dig into that intraday before we continue a rally upward. That's my bias going to the day. We dug into it here. I want to see us reach somewhat close to consequent encroachment of that level. Obviously, I don't think that's going to happen today. That's quite the stretch, but there's a very good chance I don't take any trades today. Fridays can be pretty fickle. We just had news come up. We had building permits and housing starts. Neither really affected the market, but that is your 8:30 news embargo. So we drop into a 5-minute chart. We should start to see some sort of liquidity taken. Um, I would like to see buy side taken before these lows, this double bottom is swept. That would build a pretty high probability framework for me. But so I guess this is a little bit of a shorter video, but just wanted to show you what I do for my pre-market analysis. Usually I try to get some sort of analysis in the evening before the next trading day. Um, these nights have been a little more busy for me, so I haven't really had the chance to do that. But generally, that is what I'll do. And then I'll just show you on this is TradingView right here. This is just my account on TradingView. It's free if you want to use that. Obviously, for commodities like this, uh, you do have to pay for data from an exchange, like the COMEX or the CME. I pay for that data on my brokerage where I trade live funds. So uh, I think they actually make you pay for it. It's like $12 a month. But either way, the data is going to be delayed if you don't pay for the real time. But uh, so I'll usually check the dollar index, and um, I did notice we have pretty strong sell side right down here on the 15-minute chart, dating back about 3 days ago. I would like to see these equal lows swept before the dollar heads higher. So I'm sort of wanting to see a move like that today. That's giving me pretty good framework for a bearish sentiment. If we can sweep those lows, that would force the indices to take out some of these highs, some of that buy side there, and then reverse, bringing us a reversal in the indices. Obviously, all of that is going to line up with time, right? Time and price. I base everything off of time. But then we see a little bit of rally in the 10-year yield. So again, 15-minute chart, and we've seen kind of a move to the upside, making a swing out of this lower move here in the yields. So we'll see how today plays out. I'm not coming in expecting to take a trade. Uh, I've gotten to the point, and if you were a beginner, you'll get to this point too, of where when you sit down at your computer screen, or I don't know, if you use your phone, whatever it might be, you can't open up your brokerage expecting to take a trade. That's how you get burned. That's how you try and force setups that aren't actually there, but you're convincing yourself they are there. And like I said, you will get burned. I've gotten burned. I'm guilty of that. I mean, you know, it's difficult not to be when you see everyone making, 6, 7-figure incomes, and then you just kind of want to chase that. And It's normal. That's human. But if you choose to do that, you will blow accounts. You will. So, like I said, I'm not expecting to take a trade today. Mondays and Fridays, they're not set on being a no trade day, but I am a lot more careful and a lot more limited in terms of the contracts I put on trades just because it's a little more of the Wild West on Mondays and Fridays. Um, with that being said, if you have a very strong sentiment and you are advanced in terms of experience and a very high probability model, there is nothing keeping you from taking a good setup on a Monday or Friday. You shouldn't be scared just because it's a Monday or Friday. So, um, yeah, I will check back in if the market starts sweeping buy side or sell side, and it gives me a framework. So I'll see you then. Okay, so um, I'm back. Time is about 10:14 Eastern, and we just kind of went through that 950 to 1010 macro where we get a consolidation after NYSE Open. So again, I'm pretty sure I touched on this last video. We were in a similar situation where obviously every day NYSE brings a lot of volatility and a lot of order flow into the market. Once that is after about 30 minutes into, or excuse me, about 20 minutes into the 950 to 1010 macro, we see a consolidation, and generally we start to see a market reversal. I'm not super confident in the market reversal right now. Um, However, right here is you can see that after this drop down further, I mapped out this inefficiency. It's not on the 3-minute chart, it's on a lower time frame, which I'll move to, but just pointing out this inefficiency. So, okay, we just witnessed a tick above this. So if you trade the silver bullet, this looks like it would be a pretty clear silver bullet entry. Feel free to correct me in the comments if I'm wrong. I don't trade, I don't trade the silver bullet, but here you can see your sell side imbalance, buy side inefficiency, fair value gap right here. These candle tails do not meet. It's a 3-candle range. So this candle body here is only delivering sell side. So as we've seen from this price action here, that needs to be rebalanced. The best way that I've heard ICT describe it, and I'll probably do a video talking about fair value gaps more in depthly, but the best way I have seen ICT describe it is sort of when you are thinking about if you've ever painted walls in your house and you use a paint roller. You pour the paint in the tray and then you roll the roller in it to soak up all the paint. And if you take if you start up on the top of your wall and you take one long stroke down like that, sort of near the top of that stroke, you'll get a lot of paint on the wall. But as you start to roll it down, the paint that roller leaves behind becomes thinner, and it leaves a lot of porous sections on your wall. It doesn't fully paint the whole wall because you're only rolling it down. So at some point in time, how do you fix that? Well, you change direction and you roll back up onto that level. So the stock market or any kind of market that you trade does the same thing. It will, you know, if it delivers only on the downside or the sell side, again, sell side imbalance, buy side inefficiency. It's inefficient in delivering buy side price. And the shares it's delivering are imbalanced to the sell side. It's only delivering sell side. So at some point in time, it's going to need to come back up and fill in that inefficiency. Buy side imbalance, sell side inefficiency. Sell side imbalance, buy side inefficiency. I hope that makes sense for the most part. But yeah, so that's what we're looking at right here. I was hoping, if you see this blue line right here, that was me marking out a shift in market structure. So if price were to, we saw a lot of displacement to the upside here on this 1 minute candle. If we can hold above that, and if you are bullish on the day, this is a bullish setup. Let me just turn the screen. So for the model 2022, this looks like a bullish setup, though I'm not going to take it because of my bearish bias on the day. That would be going against my directional bias. That would be undisciplined. So just something to keep in mind. I think the silver bullet is a great model, and it pairs almost in tandem with the model 2022. It's a very great pair to implement into your trading. But I just wanted to bring that up. We might start to see a reversal into the 11 o'clock hour, or up until the 11 o'clock hour. I expect it to be pretty short-lived. I want to see us start to dig into this inefficiency on the daily chart that I mapped out from earlier. So this will likely be the last portion of this video that I post. I have an exam in about 15 minutes. So thanks for tuning in. Let me know what you think of this video, and I will hopefully, maybe I'll post something for Saturday or Sunday. I'm not sure, but if not, then I'll see you.